Apple obviously thinks it's serious enough to respond to.
Oh yeah, I mean, if you go to the campus residential treatment centers for mental health, wilderness programs for mental health, which is the best, I think, the most effective way of dealing with teenage depression and 20s depression and failure to launch. Probably a quarter of them are about addiction to electronics of some form, whether it be video games, whether it be cell phone. Most of the mental health professionals are saying, listen, it's the parents who are giving the kids a free ride. Suddenly Tim Cook is in the, I guess he's got to be the parent for several billion people. I find it duplicitous. I think that everyone should it's great to raise awareness for mental health. I've been involved in raising awareness for mental health for the last 20 years, through both financial and just trying to spend some time on it. And this is a real issue, but it should be much more broad than Apple. Apple has a very easy way to be able to make it so your kid can't do these things. You have to go settings, then general, then restrictions, and then type the restrictions, put a code in, boom. So as long as I just took it to be able to do it, because Tim Cook's always cared about this, but there are a whole host of companies that don't care at all. It is odd that Apple's the one that's the focus, given the fact that they've made it easiest for kids, for parents to turn off their kids' devices.
So when you say duplicitous, is that what you're referring to, Jim, or do you have a larger meaning behind the use of that word?
Well, I just think that it makes everybody think that Apple has done nothing. I regard Apple as a leader in the field because they've cared more about about giving parents parental controls. I think a lot of the other companies we talk about, whether it be Captain Morgan, you got to drink Captain Morgan because you're on
Good
set.
morning, guys.
Facebook, trying to get as many people to be able to look at everything.
So what we're going to be doing today is hopefully we can get out soon with AT&T because we're still invested into that from yesterday for the dividend. So it's at the initial drop and hasn't really moved since the initial drop. So hopefully we can see it move up pretty soon.
Socially responsible. Why don't you take a position in the S&P 500? There's 500 companies that should be more responsible than they are. It's just really unfair.
Yeah, it is interesting. We talked a good deal yesterday about the motivations behind it or the choice here and what seemed to be the conflicting responsibilities of social investing, or at least the somewhat, which has done quite well in Europe, but really has not been something that has gained a great deal of traction in our country, guys. But at the same time, we are talking about it, right? I mean, that's a positive, I would assume. Just the conversation itself, you have to at least give them.
Yes, and I think we talked about it last night on Mad Money. I think that mental health is incredibly important. But how about being proactive? How about saying, listen, we think Apple should help set up a fund to be able to make it so when your child or your teenager is addicted, they can be able to go to places, because there are special places that really deal with this problem, and on a scholarship basis, because they tend to be $30,000 to $50,000 a month. Only wealthy people can afford to be able to crack this addiction. So I think to be able to say, here's what Tim Cook could do, he ought to be part of a large fund. We've got to make it so the kids who don't have enough money to be able to get the care that they need can get it. That would have been constructive. That would have been a constructive way to deal with it, rather than give the impression that Tim Cook doesn't give a darn.
Well, it certainly has prodded others to suggest methods of fixing or helping to fix. One of Fidel's ideas is to have Apple give us a tool that helps you manage the time spent, right? It gives you a reminder, hey, you've been on your phone for an hour straight.
Being able to measure it is important, right? Just to know. Yeah.
We'll get Kramer's Mad Dash.
I mean, remember, if we take away their phone, we take away their 911. We need 911 more than anything. I mean, like, how come no one's talking about how many lives it saves? You know, this saves a lot of lives, as well as make it so that there's some people who are addicted because their parents won't take it away from them. This is a lifesaver. I would not let my kid go to school without it if it could just be 911. I obviously don't want my kids, playing, Candy Crush. Activision Blizzard breaking out here at 67. But that's what, there ought to be some parental controls more than that.
A lot more from Jim after the break. We'll get the Mad Dash. We'll count down to the opening bell on this busy Tuesday morning. More Squawk on the Street from the NYC straight ahead.
Still waiting. Looks like it's just struggling.
All right, we got about, well, 5.5, 6 minutes to go, let's call it, before we get to the opening bell for this Tuesday. It's a long-distance Mad Dash. You're going to talk a little carnival, aren't you, Jim?
Yeah, we got an upgrade today from Credit Suisse Hold to Buy. This is another one of the, let's just say, artifices of the beginning of the year. Why is, obviously, Carnival Cruise is a great company. You're speaking down here at this great conference. But one of the major theses behind this upgrade is that
This buyer right here is trying to buy at least 3,000 shares.
So, David, what you're getting is this kind of like, okay, lodging's up, let's recommend cruise. And then if cruise goes up more than lodging, then someone will say, wait a second, lodging should go above cruise. It's a leapfrog game. I haven't seen it played since the 80s and 90s, which is that, you know what? If they like this, then they should like that. It's artificial intelligence, basically. Except for I don't know if I want to call it intelligence.
But you're somebody who likes the stock here around 66 bucks a share.
Yes, it's very expensive, $78 price target. I want to buy it because it's inexpensive, because it's run well, and because the bookings are good. I don't want to buy it necessarily because it's falling behind other groups, because then, you know, this whole relative game, if lodging goes down, that means you have to sell the cruise companies. So we want
It's
people to buy
dropped
stocks because the companies
to
themselves are
75.
inexpensive, less valued than the actual business, that are undervalued. In the stock market.
73, so
Don't
it's
wanna
breaking
buy a
down
company
right now.
because it's cheaper than
It's not
another
good for
company.
us.
Because then what happens is that company A that's cheaper, if company B goes down, you got to sell company A. We want to own stocks because the companies are good, not because something's falling behind. That doesn't work when the market goes down.
Got it. All right, Jim, stand by. Oh, look at you in that warm weather. You're making me a little upset, actually, now that I focus on it. We got a lot of other things to focus on here. Yeah.
So right now I haven't really seen any good like penny stock movements yet.
New numbers from T-Mobile. We'll get to all that.
PTIE Therapeutics, 57,000 volume. That's not bad. Another therapeutics, the Galt, 8.91% up, only 10,000 volume though. So right now PTI. So this up pretty nicely today. Let's check the news on it while my stock is dropping, but I'm still not gonna get out yet on it because it's still pre-market. It could bounce back up still. reports positive top-line results from nasal abuse potential study with Remoxy. Alright, so they had really good results. FDA has not yet established a safety. Okay, so like they had good news, but it's not FDA approved yet. We can watch it for a minute. See off the 20 around here. The stochastic, it's gonna try to bounce back up. Just good. We got about a minute and a half before the market opens. Alright guys, and remember that this live stream, you're more than welcome to ask any questions at any time, and I'll try to get to them as fast as I can.
Just over a minute's time, busy Tuesday. The conference season continues. JP Morgan Health Conference, and of course, Jim's
1 minute, 5 seconds till the bell opens.
for the Dow, Jim, the S&P, the Nasdaq, the NDX, the mid caps, and the transports. And now this 10-year at 2.5 gives us a little more to play with.
Well, I think the last group is the one that I want to focus on. When I was on halftime with Sky yesterday, I was talking to my friend Stephanie Lynn.
Why isn't my showing disconnected? There we go.
How is it possible that the rails just keep going higher? Nothing's happened to make us feel like, you know what, I want to pay more for the rails. Freight forwarders, obviously FedEx. How long, how many days did it go up on Amazon? That's the group that I can't figure out.
So I want to sell it anytime above the 37.82. That is like the bare minimum, because then I only make like $2 profit after the dividend. Hopefully it can go back up to the 38s. So that is the goal. Alright, here's the opening bell. Drop for a second, but then try to bounce back up. That's a big little gap here, about 6 cents. There we go. Come on. PTIE, sorry, is going up nicely.
Cuts it to neutral. Price target 11. Says any claims that they can reestablish demand in North America are off base. No fundamental recovery in sight. You buy it?
Okay, lots of buyers for T-Mobile here at the 60, so that's good. Hopefully it can try to bounce up. That's a big gap between 60 and 71 here.
I say let's see what the quarter brings if they can clean out the inventory. But this Susquehanna story is the one that people keep telling me. It was that Mark Parker, CEO of Nike, got tired of having his eye poked by the finger of Kevin Plank, and he struck back, and once Nike awakes, there's nothing. The sleeping giant is up, and he's crushing Under Armour. I don't know. I think the stock...
Alright, so now it's trying to bounce back up, so that's good for us.
It's probably not the right place to be.
PTIE looks like a very nice stock this morning so far. Made the X right here to go up, and it's shooting up pretty nicely. Let's take it off of the extended hours time. This is nice. So right now I can't trade until I'm out of AT&T. So in the meantime I can watch stocks and let you guys know where I would probably go in. but I would have to make sure I'm out of AT&T first before I can invest. So right now I'm waiting for AT&T. It is struggling a little bit here, so.
Up about 1.5% this morning. We did get a bit of news and an 8K from the company, pre-announcing better than anticipated subscriber metrics. Let me give you a couple of the highlights quickly.
Drop there.
Branded postpaid phone net adds for the fourth
It is in the minus, and it is on a downtrend with the MACD for AT&T. So
let's call it between 750 and
hopefully it can try to bounce back up soon.
postpaid churn. You also
Stochastic, it is kind of low, so hopefully it can show that bounce back up soon.
total net additions, by the way, of 1.9 million versus estimates that were somewhere around 1.65 million for the quarter, and share repurchases also perhaps a bit higher. So 5 million customers added
Lots of
overall,
sellers though.
for the fourth year in a row, the company's saying in the announcement. And the stock is reacting positively, Jim, as you might
So
anticipate.
PTIE,
It has been sort of
it wants to climb up.
roughly this level.
Struggling right here though.
For some time now.
Well, I'm glad you brought that up, David, because I think
Okay,
it's
so
working for me,
AT&T is breaking down a little bit.
to be a company that is back with earnings and revenue growth. I think that I'll call it the Netflix package. I think a lot of people who watch the ads, which in some cases were better than the actual football games, were struck by how much T-Mobile's willing to give you. So they're very aggressive. But here's the question for you, David. Remember when Verizon decided enough is enough? What happened? I thought Verizon was in the enough is enough thing against leisure. Does Verizon, where are these
So
coming
it's
from?
struggling here with
Yeah, that's a great
PTIE.
question. I don't know. And your point, of course, is when Verizon decided to offer an unlimited, which they have, and is out there, and apparently had some traction at least. But
Let's see here. We can keep looking at other stocks in the meantime too.
Jim, we do know that the price competition continues to be fairly strong, and that T-Mobile has consistently managed to best.
Lots of sellers for my AT&T stock, so that's not good. Just trying to break down.
Potential subscribers that are out there, or at least available. But we'll see when we hear from some
Might
of the other
curve
carriers,
around right here.
AT&T as well. Of course, the bigger news on AT&T, we're only a couple of months away, give or take a week, from the beginning of its trial against the U.S. government. But yeah, Jim, he's been able to take share over time. His parent company in Germany has to be very happy with that. And I guess it sort of answers those
Alright,
questions.
and PTIE looks like it may climb back up here.
We think eventually this company has to hit a wall, in part just in terms of capacity, any number of other issues. I don't know if that's true, but that's certainly out there as a continued concern.
Well, look, I wonder sometime whether you can build a GDP model.
My AT&T is dropping a little bit more.
The average American can't have more services, or that the average American, let's say there's a four house.
Let's check something here.
I mean, maybe there are new people, no offense to Tim Cook, because these
Verizon,
dangerous things. I know that now. They ought to have a
they went
tobacco
up,
warning. But maybe more people are getting lines. In other
but
words,
are
if you have a
struggling to
family of
keep
four,
it
maybe
up, so
everyone takes the phone, whereas
it's
before,
not just
they were doing
AT&T.
the phone, it was only two people. I'm trying to figure out, well, because David, we can't keep adding like this unless we add more people in the country.
Yeah, you're right. Or unless every single right.
What can I say?
You get your dog a device. I suppose we could start there.
This one's good.
Carl, I
My
don't know.
dog's name's Nvidia. Actually, my dog
There's
is
that
behind the
bounce.
devices.
Try to anyways.
Guys, a lot of stocks today reacting to news from
PTIE looks like it's breaking up, so that's good. To $7 a share now. It's gone up 52% already.
And then the airlines today, Jim. This note out of B of A. They upgrade American and Spirit. They cut Alaska, Southwest, and JetBlue. But the bottom line is tax reform helps.
So that on the 1 minute chart, it is a confirmation of a breakup right here. It is struggling a little bit, but it is trying. On the AT&T, with the MACD histogram, you can see the bars were going bigger to go down, but now we're going smaller to go back towards the zero on there. So that's good for us. It's what's helping it move back up. And here we made the X. So.
Price earnings, multiple names, and that airline group gives them to you along with the autos, which don't forget are
Guys, worth mentioning a name that I keep a close eye on, Qualcomm, down about 1.6%.
Again, if you guys have questions, please let me know.
This is something that I've been hearing about as well, but they have on the record here two large Chinese smartphone
So
manufacturers.
this is good.
Who together represent about 10% of Qualcomm's $22 billion in annual revenue. Basically say they think a Qualcomm-Broadcom merger would squeeze profits, and they're against it. And that's important.
Lots of buyers at the 66 here. Nice.
Also apparently reported by the Journal to have reservations
Lots of buyers at the 77.
Broadcom and Qualcomm as well. Qualcomm, for its part, as you know, has repeatedly raised questions about
Lots of buyers at the 68.
regulatory path for a potential deal. Broadcom is offered right now $70 a share, 60 that in cash, 10 in its own stock. We are anticipating at some point, certainly prior to the March 6th annual meeting, where they're trying to replace the entire board, that they are going to increase that offer. The question is to how much.
Okay, 70 is kind of like a resistance though, and it's trying to climb back and climb up towards that to break that. I think we will see it try to break it soon. 68.
And by the way, when it comes to China, remember, they also will have antitrust say
PTIE. It is going to try to do another breakup, so that's good.
it's unclear how they might view it given the opposition of some key
It
Chinese
is up
companies.
62%.
When it comes to
60.
Chinese antitrust, that also takes me to Qualcomm NXP. We are expecting that the European Union, this is some reporting out there, I've heard it as well, may say yes to the deal as soon as next week. But the Chinese still haven't done that. And that could be a ways out, weeks, before we get the Chinese antitrust approval that deal needs. By the way, a deal with very little overlap, and yet still having taken now, 15 months to get
So
done.
my stock is struggling a little bit.
The end of that regulatory review, when they know it's coming, that we finally get the conversation and the raise that we do expect in some fashion from the Qualcomm to try to get the NXP deal done. We'll see, though, Jim, where that ends up. But
Lots of buyers waiting at the 63. There we go. But also lots of sellers.
by this story about the Chinese telecom companies saying no, they don't like the prospect of a transaction.
PTIE is on an uptrend, but the histogram is going down a little bit, so I'd just be a little careful there. Remember, I personally wouldn't trade until at least it hits the 45-minute mark.
R&D budget be cut because that Broadcom has a low R&D budget. Dave, let me throw something right back at you. There's another deadline.
It is trying to climb up.
NXPI at $110 to Qualcomm. David, it's at $118.47.
Should in between 58 and 61% right here.
No, you can't. Right, they're going to have to raise. They know that. The question is to what level. It's not going to be anywhere near the 135 that Elliott is saying. And or are they going to have some sort of alternative they can offer in some fashion to say, well, we can also use the money that we might otherwise use for an XPI to buy back stock or do something like that. We'll see, Jim. But there's no doubt they're going to have to offer more. The question is what's going to be the number. Is it 120? Is it 122? Do they get to 125? I don't know. I don't know. But,
So mine, it looks like it may make an X right here, but also an X on the stochastic. So that's just one I need to watch. It's trying to climb up right now, though.
Qualcomm has a lot of intellectual property in cars too, but this is such an important deal for Qualcomm. David, I still don't understand why they don't just say, all right, we're going to pay 135, and Broadcom, we know you hate us for doing this, but we're giving you the Heisman. We don't need you, and go away.
Yeah, I get it. They're not
Here we
going
go.
to.
May bounce up here.
We got record highs across the board here. Dow's up 69 points. Let's get to Bob Bassani. Morning, Bob.
Good morning, Carl. Happy Tuesday, everybody. Nice open here. New highs, of course. Mostly up overseas. Just want to show you Korea because Samsung kind of surprised everyone. They gave preliminary numbers that were a little below expectations. That stock was down.
Lots of sellers at the 68. Oh, they're backed out. Lots of buyers at the 67. Looks like they're trying to pick it back up, though.
Here in the United States as well, they've been one of the market leaders. If you look at the sectors today, so banks are up, yields are up a little bit.
So just a review. AT&T is the stock that I bought into yesterday using my margin. for the dividend payout that I would just have to get out at least today. So I knew it was going to do its initial drop. I'm just hoping that it goes back up soon, which it sounds like it looks like it may. 70 is a resistance. 71. Here we go. And just broke it. So again, for me to walk away with profit, or even at least $2, I just need to sell it anytime above 37.82. The goal is to sell it in the $38 per share, but the stock itself is struggling a little bit.
And we're getting other people that are out there raising guidance as well. Kohl's, Children's Place, and Lululemon as well raising their guidance here. Meantime, we're about on earnings season, and this is a very, very important one because the expectations, bring that full screen back again, the expectations are very, very high for the season overall. Analysts are generally...
And I'm not worried, and I knew about the drop, and that's why I wasn't worried. The reason why I know it is with the dividends. Today is the ex-dividend date, so on the ex-dividend date, the company does take that money that it pays out of the stock, forces it to drop. So that's just common on there. And then you just sell it on its way back up, which I did this stock because I knew I calculated where it was going to drop. So it was going to hit like a support right here, and around here. So that's why I went into this one. PTIE, it is struggling a little bit. Looks like it may make the exit go down. AT&T is finally trying to climb back up, so that's nice. There we go.
Not just beating by a couple pennies, but raising guidance, more news about buybacks and capital expenditures. We're almost 20 times forward earnings, and guys, the important thing is we need to hear very positive commentary. David,
there we go, in the 80s now.
Did want to get to one of the bigger movers this morning. We got the news yesterday around 5 o'clock from Altice and its parent, Altice USA, and its parent, Altice NV, that they're going to split. They are going to essentially, the 67% of Altice USA that's held by Altice in France is going to be distributed to its shareholders, creating a much larger float and a wholly independent company.
So here's my Excel sheet. So this is how much I'm walking away with the dividend. This is how much I'm at a loss total after fees when it hits 82. So as you can see, the $2.70 profit. So we definitely want to try to sell above that, of course.
$1.5 billion special dividend and buying back $2 billion in stock, also reducing their leverage ratio, their target.
There we go, that's good.
Between 4.5 and 5 times.
Only thing is the stochastic, it is kind of high.
Around 5 to 5.5 times. And the quote will go from 10% right now overall to 42%, meaning there's a lot more stock available.
More buyers at the 78, so that's good. Looks like PTIE, it is trying to just break up right now. So for those who are wanting to trade that, of course I would be careful, but it does look not too bad. I would just watch it as it goes back up, but remember, watch out for the X for the MACD right here, and the histogram with it going down. Just be careful. So you'd be in and out of the stock pretty fast if you do decide to go in there, if it does do the next breakup, which you may want to wait for. At what price did I buy in at AT&T? It finally got me in at $38.25. So that's why the goal is to sell it anytime in the $38 per share. So I knew it was going to struggle here a little bit because, like I mentioned before, the stochastic was kind of high. So I don't think we're going to see that much of a rebound back down. Maybe at most back to the 71, but we shall see.
working feverishly when it
Thank
thought
you
that
for
Southbound was
subscribing.
preparing an offer to buy charter. It backed off from that when it appeared things had quieted on that front. But at this point, it would certainly question their ability to do that. Do they, in fact, even become perhaps now
Lots of sellers at the 78 right now.
Although, again, Patrick Drahi does continue to control.
So we may see that little bounce down like I mentioned.
USA, even after,
But I don't think it'll be too much.
by the end of, what is it,
We made the X to here on the stochastic, so that's okay. Kind of knew it was coming.
Good morning, David. You know, before we get to the regular market charts, I want you to look at a 1974 start date to the National Federation of Independent Business Small Business Optimism Index. It clicked down a bit from 107.5 this morning to a whisker under 105. Why do I bring it up? Because last month's unrevised 107.5, basically second highest level ever since the series started.
So be careful right here because it's trying to form the X down on the PTIE. And here it's going down for a second like I mentioned it would.
Take it out. Many were keeping a close eye on it. It doesn't diminish the notion that small businesses are pretty darn excited. They benefit from much of the tax reform and they're integral into creating jobs. Do the math. All right, let's move to the charts now. Let's look at Spanish versus Boone's before we get to our 10-year. It is the narrowest. 148 on the Spanish 10-year, around 43 on a Boone. That difference of 105 is the tightest since September. That's something to pay attention to, especially considering the nervousness of some of the Southern European yields jumping. Which
72.
Mario Draghi nervous. Maybe take
There's the 71 where I called it.
back to the 10-year.
And there's trying to bounce off of that a little bit.
All the way back to June of 2014. Because, yes, in March of last year we had a 263. Can't tell you how important that technical.
So it's struggling to go down more as the stochastic is going down. So that's good for us. That means it could form another X here soon. And then try to do a real bounce back up again, a little higher. So that way we can move it back up in the 80s. But right now, it is kind of staying where it's at. So histogram is not really moving too much. MACD is not really moving too much. Just waiting for that stochastic. There's a 72 again. There's the X on PTIE that I made, and it's going down a little bit, so be careful. Alright, and mine broke below the 71 for a second. I couldn't hold it, and I may actually hit 70 again. Nope. Buyers are not liking that. Sellers are trying to force it though. There's the 70. Back up to 71. And look at that. The stochastic so close to hitting the 20 where it could just bounce right back up. And we're okay. Let's look at the 5 minute. 5 minute. 5 minute, this is on the opposite side. It is technically on the 5 minute. Here it's still struggling a little bit, but that's okay. $72. 71. Here you can see it's trying to curve back up, trying to bounce off like I mentioned it would. It's at the 70.69 though, so it did have its small little breakdown. $68. Again, I'm not too worried right now. Although with dividend stocks, usually I'm already out, but it wasn't really that good to get out earlier yet, so I waited. So I'm still happy that I did. And it'll bounce back up. I'm not that worried. So usually you don't want to be in too long. Usually you may be in at the very most for a dividend one. Usually the day off of the ex-dividend date, like today, I'd be out. But that could be any time today. So sometimes you're in there for like 2 days, but not very often at all. There's making the X right now, so there's the bounce back up. Have I seen a dividend stock go back up? Yeah, so that's why I'm not too worried, because with the ex-dividend date, where they take out the money at first from the stock, it forces the drop, right? So the stock needs to react to that. So the stock, most of the time, not all the time, but most of the time, it does, you know, see that little drop. It struggles a little bit, and then it spends the rest of the day trying to climb back up. So as long as you're patient and, you know, just like I said, are patient, then you don't have too much to worry about. So 70 is that support right now, because it tried breaking below the 71 and 70, and it did for a second, but it couldn't hold it. Came right back up.
Let's get to Jim and stop trading.
We may see it though. The histogram is moving down very, very slowly. So we may see a little drop as it climbs first and then drops.
It's kind of like a salami strategy. And yet finally the stock goes up after a presentation by Brent Saunders at JP Morgan Health. Why? Because it's down so long it looks up to me. It's called trough, and the stock is trough.
All right, Jim, what's on Mad tonight?
Well, I mean, we're down here at this conference, and we've got a lot of talk, a lot of opportunity to talk to companies that haven't really spent a lot of time on TV. For instance, Canada Goose came on when they came public, but we're going to sit down with them. Obviously, it's a little warm here for some Canada Goose, but that's all right. Kohl's was the predecessor to Target, saying things were better. And how about this? J&L for some Children's Place, maybe my MVP for retail in this year.
That's some high praise, especially what's happened in the last couple of months, Jim. Great shot, as David said. Like
There's a breakdown again.
Oh, yeah, it's for Carnival Cruise.
Looks like it was trying to bounce off here.
Jim, we'll see you on Matt, 6 p.m.
May make the X to go down on the MACD on mine.
Live from the JP Morgan Healthcare
Other
Conference.
than that, I don't see another penny stock besides the PTIE that had up. It's back in the 65s. It's okay. Someone sold 10,000 shares there. They went out with $376,000. There's 12,000 shares that was sold at 65. May bounce back up right here. They're struggling a little bit though. Breakdown again. And that's okay.
Good Tuesday morning. Welcome back to Squawk on the Street. I'm Carl Quintanilla with David Faber, Mike Santoli at Post 9 of the New York Stock Exchange. Record highs once again for the Dow, the S&P, and the NASDAQ as the S&P's up 5 days in a row. Some of the macro data out of Europe's pretty good, and we'll be getting jolts in Kashkari in just a couple of minutes. Roadmap begins with Apple's iPhone defense. The tech giant striking back against a letter from investors over device addiction in children. We've got the latest.
Target's on the move this morning. The company boosted its outlook on stronger than expected sales for the holiday season. We're going to dig through those numbers.
Okay.
Plus, Intel CEO Brian
So while that's going, I will be back in about 30 seconds.
tell you how he's planning to fix the issue and when. First up, though, it gets straight to the markets this morning. All three indices are in the green. The NASDAQ did slip just a bit. The Dow, the S&P all hit record highs at the open, at least. S&P has added 2% in the first 5 sessions. 9 days into the year. Yeah. We're already above year-end targets for Morgan Stanley and Stifel and HSBC.
Yeah, I mean, it's obviously been pretty relentless. Yesterday was what passed for, I guess, a pullback, which is a flat market, kind of a rest on the way in. The other dynamic here, we talked a little bit about it yesterday, too, is it seemed like the consensus call was, oh, we're going to get this rotation into smaller stocks, into retail. It's like, nope, not necessarily. Value is underperforming again.
All right, I am back.
Anything's being really left by the side of the road. It's just that they're outperforming in an up market. So last year's winners winning, last year's losers also winning.
So the MACD line and signal line, they're touching here. Haven't formed an X yet though. Stochastic, it looks like it may make the X again to bounce back up.
Really persuasive reasons
Someone sold almost 17,000 shares though right there.
Has definitely gotten some attention. We're going back to March 20th now.
Yeah, it's been this kind of grudging move as you
Struggling to go down below this, so that's good for us.
7 years above 2.4, and now you have the 10-year above 2.5. So obviously this might be finally what people have been calling for so long, which is maybe we break out of that range that contained the yields for so long. And that takes one of those kind of big picture worries off the table too, right? Because the curve is no longer in this relentless flattening mode. Again,
Yeah,
you don't want to extrapolate everything.
No, but although, let's say you get to 2.7, 2.8, people start to look at that, and then it becomes perhaps an alternative they're willing to take.
No doubt about it.
Versus equities. And I mean, history would show if there's something that can stop it, right? Or would it? I mean, it's
Here's
funny.
the thing.
Through the years of doing this, I've heard so many different explanations of yes, higher rates do or they don't.
I think that they do, but something has to prompt that switch, right? So if the market is up another 5%,
Struggling a little bit.
corporate bonds that are high-grade corporate bonds at 4%, 4% is not going to
Buyers are, sellers are still kind of heavy. Buyers are slowing down. It kind of formed the X, but it's struggling to really make it on the MACD.
Which is, that's almost like cash, right? A 2-year treasury. You can fake it, call it cash. Meanwhile, your VIX, which was the topic of your discussion yesterday, is trying to go for 4 out of 5 up.
It's interesting. It seems as if maybe it's just because the market itself has a little more energy. It's not that it's in this treacherous position or anything like that, but people are sort of positioning and wonder. You know, and meanwhile, you have the Wall Street Journal pointing out today.
So here we go. We can see a little bounce back up.
People are feeling like
Here, trying to form the X on the stochastic.
Really low relative to the cost of betting on the upside through options. So maybe it is just people deciding, look, volatility got a little too cheap given how how much juice the market seems to have right now.
On a day where the Journal also talks about giving North Korea a bloody nose, right? Which we've not discussed at all today. Probably won't.
Why would you want to hedge against that?
Yeah, right. North Korea or cyber, of course, which continues to be a growing threat, it would seem. But again, those are the kinds of things that are not necessarily going to be and should not be weighed in the market. What you'd expect. What are you supposed to do? Right?
Exactly. I mean, you'd have to see the whites of the eyes of that.
This is good.
Before it matters.
All right, let's get over to healthcare now. It is day 2 of the annual J.P. Morgan Healthcare Conference in San Francisco.
All right. This is what we want. It's trying to climb back up here. This is great.
He is very special, David. Thanks so much. And joining us now is Alex Gorsky, the CEO and Chairman of Johnson & Johnson. Thanks for being here, Alex.
Hey, good morning, Meg. It's great to be here with you.
So one of the big themes of this conference always is M&A, is deals, and of course with the tax overhaul just
A little
passed,
struggle right there.
$16
Someone
billion
decided to
in
sell it
cash.
too low.
What do you plan to do with that? Analysts are indicating maybe pay down debt is job
Just to
number
get
one.
out.
Are you going to be reinvesting that? Are you going to be hiring? Are you going to be investing in research?
Well, Meg, first of all, it's great to be at this conference. I mean, this is about 10 years
What?
in a row that I've been out
Let's see here.
And what a way to start the year, because you come out here and you hear it's really all, not necessarily always about deals, but it's about innovation. It's about new
Sellers are really trying to
and all the
make it so
reporting,
here's a
recently that you've
resistance
done,
to
you've heard about
67.
oncology breakthroughs, cures that we couldn't have even have imagined, 10, 20 years ago.
Again, someone's trying to get. So whenever I see those big spikes and really fast down, like to the 62, even though it's at 65, 66, is someone's trying to short sell it down and trying to force it down.
Here at this conference, we've been able to meet new partners, see new technology, see new early science that we've ultimately been able to bring to the market and make a big difference.
Which is a dangerous strategy for them, because that could really be against them, because they're at an instant 4 to 5 cent loss.
That we've got a construct in place to repatriate earnings and cash from overseas.
But they do like little bit amounts. Looks like PTIE, it is forming another X, so it may be a good buy here very soon.
I don't think that it really will, because really that starts with science, that starts with the right deal, the right
And
company,
it has
the
been
right
trying to
culture,
climb up,
being
so
able to
that's
innovate
good.
in, but it certainly gives us more flexibility, and I think it's going to make us more competitive in the long run.
It is breaking up right now, so if you're in it, I would wait for a confirmation in about 25 seconds to see if that's what I would trade. So make sure that the next candlestick starts above 740, and then it wouldn't be too bad.
Core iconic brand for Johnson & Johnson, whether it's babies, whether it's Neutrogena, Aveeno, Tylenol. We've got some great franchises. And while they did perform down slightly, they were actually about flat. in the
Mine's
big
struggling a
oil
little bit.
here, what we've seen is really a secular shift throughout the large consumer brands overall. Now, we remain very confident in that franchise.
60.
If you look at the underlying
So right here you can see that is a confirmation of it's up, and it did right here make the X. Well, it's like in the process of making the X. So that's still really good though. So I personally, yeah, like if I was trading this, I would be going in.
What we're doing now is we're actually taking the way that they innovate in a very fast way, where they're connecting online immediately
That's
with
nice.
consumers, and we're building that into some of our other brands that in the consumer area. So, M&A, it's always going to be an important part of our strategy.
Well, thinking about e-commerce, a big question in 2017 in healthcare was the presence of Amazon. And of course, you may have partnerships and existing relationships with them in your consumer business. What's your expectation for their potential move into the pharmacy supply chain?
Well, what I would say about Amazon is we have a very good partnership with them on the consumer side, and we're talking to them. We sell through many of the big chains that we work with. We also sell directly. But what I would encourage almost anybody, whether it be in pharma, med device, OTC, we should all be acting like Amazon's getting into our business. Because, frankly, we've got to create a crisis. We've got to make sure that we're always competitive, that we're always thinking about how can we be more effective, how can we be more efficient. And so, we're thinking that way across all of our different businesses.
Would you welcome Amazon in, and are you talking with them about their role?
Look, if it leads to better customer satisfaction, it leads to greater
Got about 20 cents till the next candlestick starts for the 1 minute.
for patients, of course we'd welcome them in.
Any conversations happening?
Well, I won't go down that road right now, but look, I think that having healthy competition can be a positive thing, but we've always got to keep the patient, the consumer in mind.
Well, I want to ask you more broadly about the political environment right now, and a big debate going on outside this conference is the immigration debate, and what's going on with DACA and Dreamers. Some of my colleagues this morning interviewed a J&J employee who is a Dreamer, and she's worried about being expelled from the country. She says that she's actually talked with you about Johnson & Johnson's position on DACA. How important is that for Johnson & Johnson?
Well, it's very important, and it's important at a personal level. As the grandson of immigrants myself, it's something that has been a very important part of our country. And
Here's
making
trying to
sure
bounce
that
up.
we've got
It's great.
comprehensive immigration reform that takes into consideration, how can we help these people, gain their appropriate rights in the United States? How can we make sure they can be drivers of the economy? That's what this is all about. So it's certainly our hope we've made a stand on DACA. It's our hope that we can, again, get more
There's a bounce up. Great.
through. And we wanted to help our employees, like the one that you talked to this morning. Frankly, we think it's good for all of industry when that gets done.
David, do you have a question?
Yeah, thank you, Meg. Alex, back to capital allocation specific to tax reform itself. Meg had mentioned, of course, the money you have overseas, but in a larger sense, not just that $16 billion or so, but as well the lower tax rate. Do you see yourself increasing your returns to shareholders? Do you see yourself in any way changing your capital allocation as a result of both the access to that overseas cash and the lower rate here in the U.S.?
Good buyers.
Well, David, what I'd say overall,
Someone's really trying to force that down here again. They only do like a little bit of shares too. Look at that 300 right there.
ultimately is going to be great for shareholders.
Just to try to bounce it
For
down.
us, our capital allocation strategy starts with investing in our business. Things like R&D, making sure that we're competitive from a sales and marketing standpoint. And frankly, that's why we've seen the great treasure trove of launches that we've been able to do over the last several years and the kind of growth that we've been able to produce at Johnson & Johnson. After that, it's very important around our dividend. Our shareholders depend on us for that. After that, we then take a look at, value-creating M&A. Usually about 50% of the innovation at Johnson & Johnson we've acquired through
There we go. Can we get a bounce up?
M&A activities.
That it's trying to do.
We take a look at
74 is kind of like a resistance right now that it's trying to build.
Johnson with our very strong financial position is we can do those things simultaneously. It's not necessarily an either or in a linear fashion. We can do all those things, and that's why frankly we got
400 shares. Someone tried to bounce it down, which it's not working. They do that to scare
But I guess what I hear you saying, though,
the
Alex, is that
people who
nothing
are in
really
there,
changed. In other words, you've always
the
had
buyers.
extraordinary access to capital, given your credit rating in particular. And what I'm hearing you say is, yeah, we still have the same priorities, and nothing has changed as a result of tax reform when it comes to those priorities or how we go about deciding on them.
Now, David, what I would say, this is going to give us much more flexibility. Under the previous system, a lot of the large U.S. companies, because
Here we
cement is
go.
more
Saw a
sterile,
little bounce up.
we're outside the United States, it put us in a position basically where you were using the U.S. cash to pay dividends and therefore having to take on more debt. Where with under this construct,
Buyers and sellers
we're
are
no
about
longer going to
even.
have really that false construct in place. So I
Sellers
think
are a
this
little
is
bit
great
more heavy though with their
it allows us to more
size.
efficiently use capital, and whether that's through
The
our
75.
investments, through capital, or through M&A, ultimately I think that's going to be a very positive move in return for shareholders.
Also want to bring it back to what's in the clinic for you guys and what's going to be driving the drug pipeline. At the end of the last year, you did.
So not too much action is happening today. This year's been like really off with action-wise so far. Usually we see a lot more action between the stocks, but we haven't really seen that too much today. But we will.
Well, Meg, we're really excited about it for a number of reasons. One is, of course, I think our team, led by people like Paul Stoffels, Joaquin Dolato, Bill Hite, Peter Leibowitz, has done an incredible job in our oncology franchise. I mean, over the past
Last year, January was my hardest month of the whole year.
several multi-billion-dollar franchises we've been able to
So
is pretty remarkable.
it's okay.
Now, with this deal in particular, first of all, it gets us into cell-based
There we go.
therapy. The
We'll
BCMA
bounce up.
CAR
So, and
T
again,
approach
300 shares,
really
trying to
exciting. I mean, we could actually start
scare
seeing
people.
cures in multiple myeloma. And, unfortunately, probably all know somebody who's been affected by multiple myeloma. To see this possible in just a short period of time is pretty remarkable.
Looks like the PTIA may have done a pause, so this stock I wouldn't trade anymore.
Industry, come to life. So the fact that we were able to work together on this, the early data is incredibly encouraging. We think it's actually differentiated from some of the other compounds. We're excited about it for patients and for our business. Now, as it relates to pricing, look, I think the good news is that when we have multiple
My stock
approaches,
is
probably similar to what you saw
struggling a
with
little bit
IC,
just because of the
as
stochastic is so high.
breakthrough therapy, you see tremendous
So it needs to
improvements in efficacy
come
rates.
down a little
As you
bit
get more
before it can
competition,
try to bounce
price
back
goes
up
down,
again.
becomes more economical, and I think
Which is
that's
fine
the
because like the stock
will be
itself
good. I think
is
that
not
clearly
bad
with big
price
returns for
right now.
patients
So
and big returns for companies, it will also be a competitive environment.
No, Alex, we'll leave it there for now, but thank you so much.
Thank you, Meg. Have a
again,
great
people trying to scare you.
Well, thanks. We've got a lot
here.
more coming up, including the CEO of Valiant joining us later today. Stay tuned for that. Carl, back over to you.
All right, Meg, thank you very much. Our Meg Terrell. Apple is defending its record of providing parental controls and protections for kids who use iPhones and other devices, responding to a pair of shareholders who wrote an open letter arguing that the tech giant needs to tackle smartphone addiction in children. In a statement, Apple says, "We have new features and enhancements planned for the future to add functionality and make these tools even more robust." Apple says its mobile software includes
Someone
extensive
bought
parental controls for
24,000
kids'
shares right there though.
and
So that's great.
and it started offering some as early as 2008. By the way, we should point out both Jana and Calstri is going to be on a half today. Talk more about this.
So they put in almost $1 million.
The likes of Tony Fadell said today was that maybe Apple needs to give us tools to measure the degree to which this thing is stuck to your hand.
And yes, and also just to really send the message that they're trying to stay in front of the issue and apprise of it. If you look at the problems of sort of product liability creating for other companies, I mean, that seems to be what the activists were partially pointing to, the long-term risk of that. It's when you either created or an addictive product or ignored the research on how bad
78 is like a resistance, which I could touch soon.
If you were going to start a new social impact fund,
Looks
I
like
can't imagine
not
better
yet,
opening
but
this
maybe soon.
For Jana, in terms of the attention this has gotten. Good choice.
Everything's marketing in one way or another.
It is. Yeah.
There's a 78 touch.
When we come back, we'll go live to CES and hear from Oath CEO Tim Armstrong what he has to say about the content wars.
Sellers are a little bit heavy though at the 78.
Also there, Intel CEO speaking out about the company's timeline for that chip fix and why he says autonomous cars will be the most ambitious data project of our lives. Squawk on the Street continues in a moment. Dow's up 57.
See how it's struggling on the chart to go down even though the stochastic is going down. MACD histogram is going down just a little bit. Not very much though. So that's really good for us. That it's struggling to go down even though the others are going down. So that means we may see a bounce up soon. And we're so close to being profitable on there. Again, anything above the 37.82 would help us. Of course, like I said before, we want to try to sell it in the 38s. It may take a little bit of time to get to that point, but that's okay. Looks like it's bouncing off the stochastic a little bit again. Trying to get that bounce up. There we go. There's the bounce up. Looks like PTIE resumed trading, but because it was paused, that's something that I do not trade, even though it's going up really nice. Because it is up 106% now. Remember, we were watching it when it was like 30 or 40, something like that.
Major indices hit new record highs this morning. The S&P and the Nasdaq.
Okay, mine's struggling just a little bit. Instagram going down a little bit here. And stochastic is pulling down a little bit, so stock is pulling down a little bit, but it's not going down very much, so that's good for us.
For Bitcoin or for stocks? For stocks, it clearly is a melt-up based on enthusiasm over Q4 earnings, which should be quite strong, enthusiasm for the Q4 economy, which should also be quite strong, and the hope for tax reform giving us even further earnings upside as we go into the year.
And is that going to be ratified by earnings season guidance, or is it going to be clouded by changes in charges and gains because of tax reform?
I think most companies will do their best to push the tax reform issue to the sidelines, give you one page on the earnings release to say here's what it affects, but really have a clean Q4.
It's trying to climb up again.
That is the story here.
Scott, you've been cautious, I think.
Look at that. Here again. Someone just sold.
Well, Carl, you know, we
few shares just to scare people.
We found out what the final tax thing was, and really, I would disagree with Nick in that fourth quarter earnings, the actual results to me are almost meaningless.
Look at that heavy seller waiting at the 80 right there.
What's going to happen in 2018? They want to hear talk about CapEx. They want to hear talk about how the new tax code is going to affect their earnings. So, I mean, we know the results were good. 2017 is history. It's uncharted territory with this tax code looking ahead, and so I think that's really going to be the focus here over the course of the next couple of weeks. I mean, I just, you know, the market has some upside momentum here. People are starting to jump in. The economy's improving. You know, that's the story.
It's trying to.
I don't think fourth quarter earnings results are going to be.
Here it's trying to decide: am I going to try to bounce back up, or am I not?
The tax cut, if nothing else, did give this bull market a new, fresh storyline, things to focus on. Yet it's not manifest just yet.
That's the 5-minute looking on it. 5-minute looking is nice. Look at on the 5-minute, it's looking like it may make the X for the MACD. So that's actually really good for us to see that.
Yeah, you're absolutely right. What it's going to come down to is people really have to do the work on individual names and talk to companies and their CFOs to understand the nitty-gritty.
So again, I'm not worried at all.
On a case-by-case basis as we go through Q4 earnings releases and as analysts do their model for the first part of the next year. So I do anticipate the market to begin to bifurcate, but for right now, you're right. The default value is just buy more tech and go home.
Scott, any concerns about consumer credit? or the degree to which we've just hopped from a big debt-financed rally in .com, then to housing, and now to things like cryptocurrencies and stock buybacks?
Well, you know, Carl, I think things like cryptocurrencies, those are a sign that you're moving toward the late part of the cycle. You know, I mean, this bull market was born on pessimism. It's grown on...
There you go, went past. So here we're going to see that breakup. So there's the 82 that we're waiting on.
And the optimism. Eventually, the euphoria is going to be at the top. We're not near there, I don't
Again,
think. I think this bull market's going to
we're
keep going.
fine.
But consumer
We're not going to
credit,
sell right at
that's
82
a
just to
huge long-term
walk
issue.
away with $2.
We're talking
We're
about
going to let it climb up.
servicing
It's
of
making the
this
X on the
interest
5
rate is no
minutes, so
problem.
it's definitely a bonus for us.
Is it going to be low forever? Probably not. So I think that's going to be an issue at some point. I'm not sure if that's what brings this long
3, 2,
bull rally
1.
and expansion to
Next
a close.
candlestick
I think it's
starting.
further out than that, but,
And it's above, so
consumer
that's
credit,
great.
Sovereign debt, corporate debt,
It's a confirmation
those are all
right
concerns
here
to me. It's
on the 1
certainly in the
minute.
long
So
term.
struggling a little bit on that confirmation.
The first analyst to cover Bitcoin. Right
That's
around
okay.
2013. Now we're hearing from people at TD Ameritrade that Bitcoin is a way to get millennials into the market. Which is that a good thing? Is it likely? Is it good or not?
It is true because millennials feel they understand the technology better than perhaps people of my generation might. But at the same time, it's a dicey way to introduce people to the merits of trading, simply because cryptocurrencies don't have the track record that stocks do, for example, in holding and creating value over a long period of time.
And I guess I struggle with what it tells us about the risk-taking environment right now. Is the fact that there are these hundreds of billions of dollars in capitalization attached to something that didn't exist a few years ago?
I'm surprised I don't see anyone trying to scare her right now with selling it really cheap.
In order to bet on something like that tells you that, you know, equities are still kind of sober and rational right now.
Yeah, I mean, I guess the good thing you can say about it is people have been avoiding equities for years now. The money flow data from the ICI has been negative for mutual funds and ETFs now for 4 years.
About 45 seconds we have the next 5-minute candlestick start, so that's really good for us.
Last year, so they might be independent, but still show us that at the end of the day,
And it's trying to see if we can curve off right here
bonds, or they're looking for the juice, which comes from crypto.
Finally, Scott,
on the stochastic to see if we can get that bounce up. So
this morning, S&P's already exceeded year-end targets at Morgan Stanley, Stifel, HSBC. I guess you're saying you expect the equity strategists to raise those targets in the coming weeks and months?
I think that's probably true, Carl. You know, for us, you know, our midpoint of our target range is about 6% higher than we are here in the S&P 500. But where we could get tripped up, we're looking for 2.9 GDP. Let's say it's more than that. We're looking for 2.4% CPI, which is low. Let's say it's there or lower. You know, there's
here's
risks,
trying to
both
form
the
it.
upside and the
So that's
downside
good.
where we expect the market. But I think this year is going to be an odd year where we are going to see more index target changes than we have seen in a long, long time. I mean, this year, I thought that we were going to have a volatile 2017. That obviously was not the case. But I really think this year we're going to see some more volatility, and we're going to see a lot of target changes.
We will see. Nick, Scott, thanks, guys. Good to talk to you.
All right,
Nick Colas.
roll tide, guys.
Scott, congrats. Thank you.
Our Intel CEO Brian Krzanich speaking at CES on the issue of security flaws in his company's chips. John Fort is at CES in Las Vegas with more on Intel's response. Hi, John.
There's that bounce up, 84.
Technology, but at the first, continue to address this security issue that continues to rock the chip industry and Intel primarily. Here's what he said.
For our processors and products introduced in the past 5 years,
Sellers are still heavy at the 84 though.
for more than 90%
Look at all those sellers.
and the remaining by the end of January. We believe the performance impact of these updates is highly workload dependent.
But that's okay.
And it's not just Intel. AMD talking this morning about the fact that Microsoft has halted a security patch for one of these issues. Here is AMD's statement. AMD is aware of an issue with some older generation processors following installation of a Microsoft security update that was published over the weekend. AMD and Microsoft have been working on an update to resolve the issue and expect it to begin rolling out again for those impacted shortly Intel also in the keynote.
81 is a support, but it's trying to break that right now. 80s is also support.
They're really trying not to talk just about security, but to talk about
Again,
chips
we're just
as well.
fine.
The trend overall, though, seems to be about recognizing the real world and doing new things with it, new camera angles, immersive experience. They touted the Olympics, which, as part of the NBC family, we know a little something about the Winter Olympics coming up. Their chips will be used with cameras there. Also, something called the Volocopter, like a helicopter that operates as a drone, battery-powered, electrically powered. That's getting quite a bit of attention here. And finished off with a music and light show. But the talk of chips here this week is likely to be those security issues.
Someone sold 20,000 shares down there. It's unfortunate for them.
Not all of them are working as expected, at least initially. Still, though, no reports of hacks.
Because it is going to try to climb back up even higher, so.
News out of Intel, and of course it's not going to stop anytime soon at CES. John, we'll come back to you. John Ford. We're just 1 month away from the Winter Olympics in
Buyers are really heavy compared to the sellers right now. Sellers are trying to pick up. You see this number rising right here.
The cheering squad and a performance art troupe. The event will be the first time that North Korea has participated in the Winter Games in 8 years.
All right, when we come back, hitting the pause button, 2 U.S. companies holding off on proposals to launch Bitcoin ETFs.
PTIE is up 147%. $11 a share. Crazy. But again, broke my rule of pausing and resuming. I don't trade those stocks. It's trying to break up. Can we get that? Needs to hit 85 and then it can start climbing up again. Sellers are kind of heavy though compared to the buyers on the top right. As soon as we see the stock hit 85, then it can start climbing up again. And we may see a little movement on there in about 30 seconds. Because then the next 5-minute candlestick starts. We'll see if it will help. Because it was trying to form the X with us, but then it may decide not to just yet. So we will see. Could still though, but we'll see. On the 1 minute it is struggling. Again, I'm still not worried. Okay, so here saying yeah, we formed the X, but our lines are touching. So that little bounce down really helped the stochastic get that little push down, so that way it could have a better rise up. The MACD line and histogram signal is struggling a little bit, but that's okay. Look at that cross below the 20 line here. So next 1 minute in about 30 seconds we may see it try to climb back up. And on the 1 minute it is trying to form the X though right here. It kind of did, but it's struggling to hold that X for the downtrend. So in about 12 seconds. We'll see what it does. 5 seconds.
6 people were taken to hospitals, most with minor injuries. No one was killed. One train car derailed, and no word yet on the cause of that crash.
Here we see that little
China says
curve.
rescuers have found a body believed to be a sailor from the Iranian oil tanker, which collided
And there's
with
the
a freighter at sea.
bounce up that I mentioned that it may do.
One other sailors missing from that tanker, which is still on fire and at risk of exploding. And here at home, Alabama is the king of college football again after beating Georgia in overtime 26-23 behind a backup freshman quarterback. The Crimson Tide winning its 5th national title in 9 years. It was a great game. That's the news update this hour. I will send it back downtown to you. Mike?
Sue, thanks. I think I watched the wrong half of that game as it now
I
turns
know,
out.
I
Thank you
know.
very much. A little late. Meanwhile, 2 U.S. companies holding off on proposals to launch Bitcoin ETFs. The fund manager cited ongoing concerns by the SEC. Joining us now with more on this for our ETF Spotlight, Bob Pisani, and the CEO of Inside ETFs, Matt Hogan, here at Post 9. Bob.
Thanks very much. So we've got these reports that 2 companies who seeking Bitcoin ETFs are withdrawing them. What do you think the SEC's positions on ETFs, Bitcoin ETFs, is going to be this year? We haven't heard from them officially.
Hitting that 84 again, 83 and 84. We just needed to hit 85. Then, if it can start above the 85 on the 5 minute and on the 1 minute, then we can see a really good movement up.
I think it throws back into question whether we'll see a futures-based Bitcoin ETF or a physical-backed Bitcoin ETF first.
Well, wait a minute. Everyone before the SEC, which has control over the regulatory agency for securities, CFTC has for futures, different organizations.
A little struggle down, but that's okay.
Wait a minute, there's no regulated derivatives market. So everybody now said, well, this is going to be great. Now that we have a Bitcoin futures market, maybe that will be sufficient. And apparently, it's not sufficient at this point.
It's not sufficient. They want a well-developed futures market. What we have right now is a nascent futures market.
So their positions kind of keep moving.
Yeah, absolutely. Well, they're not eager to put something onto the market until they're absolutely sure it's going to work. I think it's probably smart. That market is relatively thin. The trading is pretty limited, and it could get swamped by volume flowing into an ETF. So I think it's smart and steady, but I still think we may get there this year.
So what's it going to take? That's a kind of nebulous idea, a more well-regulated, quieter, whatever. This is all vague.
Well, look, I think the killer app in the Bitcoin ETF space is a physical-backed ETF. That's what people actually want. We don't want a futures-based ETF. Just like people want spot oil, they don't want futures-based oil ETFs. So I think that's the killer app. I actually hope that's where we end up first.
Do you think we'll get approval for an actual Bitcoin ETF, not a futures ETF, an actual Bitcoin ETF trading?
This year?
Is the bar going to be higher? It's going to be higher, right?
It's very high. It's already very high. I'm not sure we'll get it this year. I think we may see it in the next year or 2, but I do think we'll get there eventually.
When? 2019.
2019, I'll put it out there.
Yeah, so the Winklevoss twins, who have a application for an actual Bitcoin ETF, are going to have to wait a little while longer.
Well, and who knows? Maybe it'll come in. But
So it's good that this one started right here.
Eventually, that's what investors will get.
Matt, is it obvious at this point that the underlying market,
It's actually really good.
physical Bitcoin, as we kind of ironically call it, is actually well
Even though it's struggling a little bit,
get tremendous demand through an ETF
it's okay.
to buy actual Bitcoin. I mean, is the SEC going to think that's okay?
You know, I think there's really significant trading volume in physical Bitcoin, to use that term. So you are seeing it.
So it is a little bit red, but that's okay.
You're seeing billions of dollars traded, so I think it is well
But an ETF is going to buy it and kind of put it away.
That's exactly right. He'll buy it, put it away. The question is, how do you custody, make it safe and secure? I think those are the things that they're looking at, but those are all technical details. There are already funds out there and hedge funds that are doing it successfully. I think eventually it'll get into an ETF, and I think that'll be a good thing for investors.
And there is precedent for that. We have the gold ETFs. They actually own physical gold behind them. So here you have a Bitcoin that would actually own physical Bitcoin.
That's exactly
so there is a
right. I
precedent.
mean, the custody issues are a little bit more complex, or significantly more complex. But yeah, it's digital gold, and you'll custody it. I think it'll trade just like a physical gold ETF.
Before we let you go, big story last year, record inflows into ETFs. We talked about the trends overall.
Buyers are trying to come in at the 80 right now, so that's good.
Out of active management into index funds.
It is trying to form another X here, which isn't good for us, but
Do you see these trends continuing? Are ETFs going to continue to dominate the investment?
I think they're going to accelerate from here. So a lot of people think this is the year for active. I think we're still at a couple of years off from that. I think each of those trends, the fee war, assets, etc., it's all going to spiral up.
there's the bounce up to the 83.
People seem to think that we're going to get a correction in the middle of the year, and somehow active management's going to make a comeback because they'll look smart, or low volatility ETFs will come back in because they'll suddenly look smart. Your thoughts on whether there's a correction and how that'll influence ETF trading?
I think active and fixed income will do well, and we'll see real flows there. I worry about flows into low volatility ETFs. Low volatility stocks are very highly priced. Utilities trading at a PE of 30. I think where the flows should go is into value and deep value ETFs. I hope that's what we'll see. I'm not sure it is, though.
Matt Hogan, we'll have you back soon to talk about that Bitcoin ETF. Hopefully, we'll see more about that.
Thanks, Bob.
Later this year. Thank
More
you.
buys at 81.
We got some big
That's
retail
good.
numbers to get to this morning, beginning with Target, moving higher after reporting some upbeat sales. Our Courtney Reagan joins us with more. Hey, Courtney.
Hi, good morning, Carl. So it's the first of the big box retailers.
For individual stocks,
3.4%.
that's what you're looking at.
2% growth guidance that it gave in mid-November. Target's increasing its fourth quarter and subsequently full year guidance as a result of
I don't do ETFs and mutual funds,
sales and the tax benefit. They think it's
just straight individual stocks.
Though it really is the sales that are the bigger benefit.
Let's see, we can get that bounce up right now.
More than 2.5% at this point. Now, Target says the stores fulfilled 70% of digital sales through both shipping from store and pickup in store, but after ordered online. All 5 core categories, that includes food and beverage, saw their comp sales improve in the holiday quarter, or the holiday 2 months, I should say. We're still in the quarter. The retailer also giving its initial full year.
Maybe we can see get to the 85 and then try to bounce back up higher than that.
Target's also tripling its store remodel program to 325 stores. It'll open 30 new format, those small format stores this year.
Sellers are kind of heavy though, to 84, because that's like the big resistance.
Urban Outfitters grew their sales 2% for the
Looks like they may have backed out a little bit. We may see it hit to 85.
It was sales of media and tech products at Urban Outfitters that
Nope, they're coming right back.
that comp down at that brand. So shares for Urban Outfitters are falling by more than 5.5% at this point, but up 44%.
Started up here again, so that's good.
Morgan actually says this is an opportunity to buy on the dip. If you're looking into the details for Urban, it was the smaller brands again outperforming the main Urban Outfitters banner during the holidays. Free People comp sales up 5% for that main Urban Outfitters banner, up just 1%. David, back over to you.
Struggling a little bit again, but that's okay.
Well, let's get to a teaser when we come back.
The 30 seconds has the next 5-minute candlestick.
In Las Vegas at the Consumer Electronics Show, we're going to break down the state of media, content wars, how's it going over at Verizon Forum, and a lot more. We're back at this.
Okay, they're struggling a little bit right here on the 5-minute, and on the 1-minute it has like a small little break. 77 is like a support though. It's trying to climb up, so that's good. It's going back up. Great. 83. May hit 84 soon. Here's the one person trying to scare ya. Selling it too cheap. 84 again, 83 and 84.
Names in technology. Our Julia Borson joins us now from there, and she has a special guest for us. Julia.
Thanks so much. Good morning to you. I'm joined now by Tim Armstrong. He is CEO of Oath, which is, of course, part of Verizon. Tim, thanks for joining us here at CES.
See you again. It's a yearly
Yes,
interview.
our yearly CES interview. And this is your first interview since you announced an expanded deal with the NFL to bring NFL programming across Oath properties and across the Verizon's properties. Why did you decide to make this deal?
Well, one, I think
It looks like it may
just one step is
have a good opportunity to break up soon.
originally, and then when we bought Yahoo, the real goal was the movement in the world is for consumers to go mobile, and you see it.
It is trying to climb up on the stochastic.
Content statistic overall. So the NFL deal is a direct plug-in to what the overall Verizon O strategy is, which is to bring the world's best content and services to the mobile consumer, and that's really, I would say, this is probably one of the first big building blocks for us over time to bring great content and great services to the mobile consumer.
But I hear you're spending as much as $2 billion. Are you concerned about the fact that NFL ratings in television are on the decline for the second consecutive year? Does that mean that maybe you are overpaying?
Where do I go to find my dividend stocks for the day? So what I do is I just have the calendar pulled up. Look at dividend stocks. Like for example, tomorrow's the 10th, so I would look at the 10th dividend, and then I look at these stocks. If you don't have eTrade Pro to look up at this calendar, you can definitely go to online, where you can watch the stock the calendar as well on the Nasdaq dividend stocks calendar. You can check out the 10th, and you can see all these stocks right here. So you can just see when the ex-dividend date is, announcement date, record date, payment date, dividend, how much they're paying. So you can definitely use one or the other.
Big content deals coming this year? Are you going to be spending many more billions of dollars on content?
Well, I think one thing Lowell's been really clear about is the future of 5G, where connectivity, connected homes, connected people, connected cities are happening. Content is one big piece of that future. So Lowell, I think, has tied the content investments directly to where 5G is going. And he talked about that last year. You've seen us do the NFL deal. We're the digital partner for CES with Engadget. We have the Makers Conference in LA coming. So you're going to see a drumbeat of us doing more content-related things.
That's a good question, Kiji. So you can go to my website. It's called knkstrategies.com. The DVD that will be up soon will give everything about how to get started, my rules, my guides, everything that I do every day. That's what you'll be able to see in the DVD. It's not up yet for the DVD wise, but it will be soon. I'm just still working on it. In the meantime, I'm live streaming for free on YouTube until the 15th. After that, you would have to be a subscriber on my website on the knkstrategies.com to be able to watch.
Put them with one click away on the Yahoo app, which is frictionless for consumers. That's how we come to the game.
But do you think you need to do M&A to better compete?
We will do more service.
So right now it's hitting the 84, 83, so it's still having the fight there. Trying to curve up right here, so that's good. Trying to do that little push up. It started above right here, so that's actually really good for us. So we might see that 85 in just a second, maybe.
The drumbeat since we closed the Yahoo deal is execution. We executed very well, hit our 2017 plan. We're launching the NFL a week early. Voice is something that we're actively working on in two different regards.
So on my DVDs, so there'll be multiple DVDs. So the first one's gonna go over like actual day trading, like the penny stocks, the actual looking at how to find stocks, what is stocks, how to set everything up, what you need to be looking for, and
for joining us, guys. Back over to you.
yeah, just to go over the basics on there.
When we come back, Oracle's making a big bet on education. We'll get an inside look when Squawk on the Street continues.
Buyers are really trying to push it right now, so that's good. There's the 85 that we've been waiting for. Let's go. There's the 86, 87. All right. It's at the 88, so that's good. We almost saw it jump to 89 for a second.
One top technician says 3 charts are creating the perfect storm for more record highs. We'll reveal what they are at tradingnation.cnbc.
Okay, they're struggling a little bit.
Coming up.
That's okay. Ooh, just went below the 85 for a second, but that's okay. 8 seconds left till the next 5-minute candlestick starts. Starting, so it's still starting pretty decent. A little red though.
Oracle's unveiling a $43 million charter school on its campus. Our Aditi Roy joins us now with an inside look. Hi, Aditi.
Hi there, Carl. It is a really exciting day, and what a cool space here.
So yeah, so I do a bunch of different strategies. So I do like the penny stock strategy, I do dividend strategies, I do regular stocks with their strategies, I do swing trading, I do short selling. I do a lot of different strategies when it comes to trading stocks. So you'll be seeing a lot of that in my DVDs that are coming up. And also those who are subscribers on the website at knkstrategies.com, they will also be able to have a discount on the DVDs. So keep that in mind. Stochastic down here, so it may help try to move it back up again.
In education, for instance, Google supplies enough apps and Chromebooks for half the U.S. primary
hitting that 85 again, so that's great.
$100 million on San Francisco public schools over a decade. CEO Mark Benioff, we understand, treats the fund like a VC, meeting closely with principals. And here at Oracle, the company's even lending out its employee shuttles to be used as school buses, and the school's basketball team, well, they'll be using the company gym for practice. They'll have a separate entrance. By the way, Safra Catz, CEO, will be addressing the inaugural class later on this morning. David, back to you.
Okay, thank you. As we head to break, don't miss today on the halftime report. Apple responded to Jana Partners and CalSTRS after the investors urged the tech giant to take action against smartphone addiction in children. Jana Partners, Barry Rosenstein, CalSTRS, and Sheehan are going to join Scott Wapner. Should be very interesting. Horse walk in the street.
There we go. The good thing is it's really trying to stay above the 85. Trying to anyways. Stochastic. Looks like it's forming the X over here again, which is great. $84, $85. And I'm still not that worried. May touch 84 again in just a second, because there's lots of sellers. Okay, so this one even started up there again, so that's good actually. And it'll bounce down to 84 for a second. Lots of sellers for a second, but buyers try to pick up too. Sellers still though, sellers are really trying to bring it down.
Healthcare, those stocks trading close to 1% higher today as the JP Morgan Healthcare Conference rolls on in San Francisco. We've got names like Illumina, also Boston Scientific, Allergan, all up by 3% or so today. Illumina is the top performer in the S&P 500, trading at levels that we haven't seen since July of 2015, so certainly a sector to watch. Now,
84 is a support, so.
Don, thank you very much. Amazon's Jeff Bezos is now worth more than Bill Gates ever was, surpassing $105 billion, according to the Bloomberg Billionaire Index. Shares of Amazon have risen over 6.6% this year, and now we're in a phase where the horse race of the richest person in the world is going to potentially go back and forth between Gates and Amazon.
Right, because he does retain enough of Microsoft shares right now that it is pretty much nip and tuck. You have to think, of course, Gates giving a lot of his away. If you go back to 99, Gates on an inflation-adjusted basis and adjusted for the size of the stock market, is still ahead of where Bezos is. It's a mark of Microsoft's dominance.
That is interesting, right? To your point, Gates has given so much to his own foundation. That said, Bezos is just getting started, at least if you heard from him. So, I mean, who knows where that could lead.
Yeah, age of the company and the man, right?
We're back in a minute.
Bounce down to 83 for a second. I'm back to 85, 84, so that's good. Alright, he was trying to bounce up. That's good. Still lots of sellers though. That's the only worry that I have there. Lots of sellers, they don't want to go higher than 86, and 86 is a resistance right now. Even though it's been above it, which is good for us that it's been above it, but right now it's just a little struggle right there. Again, just shooting between 84 and 86 right now, so we're just waiting.
Good morning. It is 8 a.m. at CES in Las Vegas. It's 11 a.m. on Wall Street, and Squawk Alley is live.
On the MACD on the 1 minute, it is struggling a little bit right here, where the lines are basically touching. Only thing is that the green line's below the red, but it's okay. So it's hitting the 83.
Good Tuesday morning. Welcome to Squawk Alley. I'm Carl Quintanilla. Courtney Reagan joins us here at Post 9. John Ford is live in Las Vegas at this year's Consumer Electronics Show. So much news coming from CES today. That brings us to FANG stocks continuing to hit some records. Amazon and
They're
Netflix
struggling a little bit.
already in the session. Joining us this morning to talk about it, Walter Piecyk is BTIG's managing director. Andy Hargraves, of course, KeyBank senior research analyst. Guys, good morning to you both. Walter, just on CES, I mean, so many of these names are presenting this week, are having workshops for developers, and unveiling ostensibly technologies that are going to drive earnings higher. How much of a catalyst is CES this week?
I mean, there's always something that becomes the theme of the show, but it doesn't always necessarily translate into a lot of revenue and earnings growth. I mean, the thing we talked about, like artificial intelligence and the goggles that people were wearing a couple of years ago for virtual reality, and it didn't really materialize in anything that significant for these companies. So it's fun to see new products and
Trying to bounce up here, so that's good. Hitting the 86.
But I wouldn't get too overboard on it impacting 2018 or giving us good insights into what's happening in 2018.
All right, so products aside, what is driving the sector, and what's your outlook for it this year?
Well, for us, the wireless industry in general, it's been not that competitive in the United States for the past year. T-Mobile just pre-announced great numbers again today. The real question is Comcast going to have an impact as far as new competition, and what does that mean in terms of incremental phone sales for investors? The upgrade rates are at all-time low. People are holding onto their phones much longer than they ever have.
If you're wondering what I'm doing on this Excel sheet here, why I keep changing the shares amount, is I have another account that's also in there.
Fees alone is not going to be enough, I don't think, to be able to deliver the consensus revenue estimates that are out there.
Andy, those FANG stocks moving higher yesterday, moving higher again today. You put out a pretty detailed note here about the impact of tax reform on some of these names, both with the change in depreciation and, of course, the effective tax rate. Can you sort of run us through the FANG stocks, where you should be positioned as an investor in these names? Did you miss out entirely? Can we still move in?
I think you can still move in. I mean, as we look at these business models, they continue to look like some of the best in the world. These are companies.
Here you see the stochastic trying to climb up, so that's good.
Not just collecting and analyzing data, but turning it into useful products. They're all global businesses with extraordinary scale. And if you look at the multiples, a lot of them haven't expanded despite the market strength. So from a growth to valuation standpoint, they still look really attractive.
So it's not priced in, some of the tax reform.
Okay, so I shouldn't be looking at that no more for the other one.
Yeah, the tax reform is certainly a benefit. Not as much as some of the other sectors that are a little bit more domestic focused, but it doesn't hurt. And like you said, if you're looking at that, the valuations on a growth-adjusted basis, they still look really good.
Walter,
Sellers are kind of heavy though still, but buyers are really trying.
Those trends at CES that are continuing. I guess the frustrating thing is we don't have good unit numbers on how many echoes there are out there, or a real sense of the economic power of this movement. But to what extent do you think some of these voice
There we go, see that little bounce up, so that's great.
Cortana, Google Home, Google Assistant enabled devices could have the same kind of disruptive effect that the browser had 15 years ago?
I mean, I think Professor Galloway touched on this recently, and that's certainly one of those existential risks that exist for how we
I may get out just because it's running past 9 o'clock and it's not really moving too much anymore. So let's see if I can just get out at the 86.
Even the cable companies, which have set-top boxes in your homes, can theoretically try and take advantage of this, given that the presence they have in the home. Siri is something that obviously is going to develop, but I think sometimes people get a little bit overexcited about the impact of Alexa. To your point, we don't know how many are in people's homes right now. I'm guessing it's fairly limited. In the future, there's a tremendous opportunity for whether it's Apple or Amazon or Google or even the cable companies or the telecom guys to try and own that presence in your home that will control that voice interface.
Because it's not really moving anymore, so.
Walter, we appreciate your time today. Obviously a lot to process coming out of CES. Walter Piecyk of BTIG. Andy's going to stick around for a quick moment. Meanwhile, one FANG component does find itself in the headlines again today, and that's Apple, of course, defending itself from those concerns about the use of iPhones in kids. Josh Lipton has that story. Josh?
Carl, Apple now officially
I'll keep it at 36 so far. 86. It did get me out, so that's good. So let's see here. I don't look at the gains and losses whenever I do dividends. So it says I took a $92 hit there. Right, so let's see here. Which is about what I got here. So, but I walk away with $102.90 of the dividend. So overall, I still walk away with money, even though it's not too much. It just wasn't moving anymore, so I'm done. 287, but that's okay. Struggling too much. Like I said, volume, like as you can see, right here, as soon as it reaches 9 o'clock, at that final spike of volume, and then it's been struggling with volume. It's just going down, and you guys will see the stocks movement go slower after 9 o'clock until usually about 9 o'clock my time, sorry. So then you guys will see it slow down until at about an hour and a half to 2 hours before the stock market closes. And look at that, it just jumped to 90. Looks like I got out too early. I still walk away with a little bit, yes. Not much, but that's okay. Alright guys, so I will be back tomorrow morning, and I won't do a dividend trade today where I go in something. I will do it tomorrow. Tomorrow hopefully we can do a day trade, so we will see how it goes then. You all have a great rest of your day, and I'll see you all tomorrow. Thank you.